Okay, if we refer to the illustration, marginal costing and absorption costing, so we have different net profit for marginal and absorption. Sometimes we have equal, sometimes we have different. So this is the reasons why we have different profit between marginal costing and absorption costing. Number one, there is different methods of stock valuation. Of course, because we use marginal costing and absorption costing. So different method will give you different stock valuation. Because marginal we use only the variable production cost, while for absorption costing we use full production cost. Okay, and then there is movement of stock. That means stock increase or decrease. And then under or above absorption of fixed production overhead under absorption, because ada under over absorption under absorption costing approach. So that's why the profit is not same. Okay, however, there are circumstances when marginal costing and absorption costing approach will report identical profit. So this example in period 1 in illustration. Period 1, okay, the profit in marginal costing and absorption costings are same. So because of what? No difference in opening stock and closing stock. Opening stocks and closing stocks are equal. Opening stock 0 and closing stock is also 0. If closing stock 10,000, closing stock is also 10,000. No movement of stock. Okay, when the number of unit produced and sales are same, you produce 10,000, number of units sold is also 10,000. No movement of stock also. So that's why the profit for both will be same. Okay, so now we refer to the impact we compare to the profit and loss under marginal and absorption costing, and we see the impact on profit. Okay, if we refer to this first situation, production equals to sales. That means the production units equals to sales units. Okay, whenever sales are equal to production, the profit will be same. Profit will be same for both absorption and marginal costing. So when sales and productions are same, there is no changes in stock. So that means the opening stock and closing stocks are equal. No changes in stock level. So the net profit under both are same because the fixed cost incurred during the year is charged against the sales in the same year. Okay, in the same year. So the marginal costing profit is equal to absorption costing profit. So this is the first situation. If we refer to the illustration, this is period 1 situation. Okay, so this is for period 1 situation. Okay, P1. Okay, now we refer to the second situation. Production exceeds sales. Okay, production exceeds sales, if we refer to the illustration just now, is under period 2. Okay, examples for period 2. When production is more than sales. Okay, 9,000 production, sales is only 8,000. So if production exceeds sales, the absorption costing profit will show a higher profit than the marginal costing system. Okay, so absorption cost shows the higher profit because of what? Because of the fixed cost of the year is charged to the stock and carry forward for future years. Okay, so the absorption costing profit is more than marginal costing profit. Okay, so in this case, if we refer the closing stock and opening stock, closing stock is higher compared to opening stock. That means we have stock increase. Okay, we have stock increase in this situation. That means we refer to period 2. So in this case, the total fixed cost will charge against the sales for the year is less than the amount of fixed cost incurred. Because you produce more, you sell less. Okay, yeah, that you charge to the sales is lower. Therefore, net profit under absorption is higher. So this is situation 2. Okay, how about situation? The next situation. The next situation when the sales exceeds production. So this is referred to period 3. If we refer to the illustration, when your sales is more than production. When the sales is more than production, it shows that marginal costing profit is more than absorption costing profit. Okay, under absorption costing, the fixed costs that have been carried forward in stock from the previous year are now charged against the sales in the year which goods are sold. So the total fixed cost charged against sales is greater than the amount of fixed cost incurred during the year. So therefore, net profit will be lower for absorption costing. So in this situation, the stock decrease. So we refer to period 3, stock decrease, because your sales more than production. Okay, so these are the three situations and impact on profit. Okay, so when we have different profit for marginal costing and absorption costing, and under marginal costing is only for internal reporting and not accepted by external reporting under GAAP, so we have to reconcile the profit. How to reconcile the profit? Normally, we reconcile the profit, we start from marginal costing approach. We start from marginal costing and we reconcile with the difference in stock valuation. Okay, difference in stock valuation, because stock valuation for marginal and absorption are not same. Okay, then we get profit for absorption costing. So marginal costing profit plus difference in closing stock minus difference in opening stock, so we get profit for absorption costing. So based on the previous illustration, now we reconcile for the two approaches. Okay, now we refer back to the previous illustration. Okay, previous illustration. Okay, so this is marginal costing approach. Okay, so we prepare profit reconciliation statement. Okay, we refer to profit reconciliation statement. Okay, we have period 1, period 2, period 3. Okay, marginal costing. Marginal costing profit, if we refer here, we have period 1, we have 20,000. Okay, and then period 2, we have 12,000. Period 3, we have 28,000. So this is marginal costing profit. So now we plus, okay, closing stock difference. Closing stock difference. So how to get closing stock difference? Okay, closing stock, we refer to period 1. We have 0 closing stock. Okay, 0 closing stocks. So 0 closing stock. Okay, minus opening stock difference. Okay, opening stock is also 0. Okay, so we refer to period 2. Okay, so closing stock. How much is closing stock? 4,000 for marginal costing. Refer to absorption costing. How much is the closing stock? Is 6,000. 6,000 here. Okay, marginal costing is 4,000. So difference by how much? Difference by 2,000. Okay, plus closing stock difference minus opening stock. So opening stock is here 0. Okay, absorption costing is also 0. So minus 0. Minus 0. Okay, so refer to period 3. Okay, so closing stock. Closing stock is 0. Okay, closing stock is 0. So absorption costing also 0. So difference is 0. Okay, difference is 0. Okay, how much for opening stock? 4,000. Okay, and the absorption costing is 6,000. So difference by 2,000. Difference by 2,000. So minus opening stock 2,000. Okay, now we get the profit. Okay, this is the profit for what? Profit for absorption costing. Absorption costing profit. Okay, 20 plus 0 minus 0 is 20,000. Okay, 12 plus 2, 14 minus 0 is 14,000. 28 plus 0 minus 2 is 26,000. Okay, so now we compare with the absorption costing profit 20, 14, 26. So we get the same amount. 20 for period 1, period 2 is 14, period 3 is 26. So we compare the profit, we reconcile from marginal to absorption costing. So this is how we compare. Okay, so another method, okay, that we can prepare reconciliation, we just refer to the stock movement. Or another method, okay, we can take the stock movement, okay, or okay, we start also with the marginal costing profit. So 20,000, okay, 12,000 and 28,000. Okay, we plus if stock increase, or we minus if stock decrease. Okay, if we refer to period 1, no stock increase or decrease. Okay, opening 0, closing 0. So no increase or decrease. So it means 0 here. Okay. Okay, refer to period 2. Opening 0. Okay, opening 0 and then closing is 1,000. So stock increase. Stock increase we should plus. Okay, so how many? 2,000 units. Okay, sorry, 1,000 units. Okay, 1,000 units. Okay, 1,000 here. 0 increase to 1,000. So 1,000 units. Okay, 1,000 units. So times 2 ringgit fixed overhead production. So you get 2,000. So plus. Okay, so stock increase with plus. Okay, how about period 3? Okay, period 3. Okay, so from 1,000 to 0. That means stock decrease. Stock decrease we should minus. So how many units decrease? 1,000 units times 2. So we should minus 2,000. Okay, minus 2,000. So we will get here marginal, absorption costing profit. Absorption costing profit 20,000. Okay, plus 14 minus 26. So there are two methods. Either you want to plus closing stock minus opening stock, or you can adjust straight away with the stock movement. Stock increase you plus, stock decrease you minus. So this is reconciliation of profit statement from marginal to absorption costing. Okay, so now advantages and disadvantages of marginal costing. Okay, under marginal costing, okay, so this is referred to marginal costing first. Okay, so what is the advantages for marginal costing? So the first one, evaluations of cost behavior in marginal costing makes manager aware of how sensitive costs are to changes in the levels of activity. So when your level of activity or volume of production increase, what will happen to your costs? Increase or remain constant? Because we classify according to cost behavior. So that's why it can help management in decision making. Okay, for planning, also for control the cost, pricing and resource allocation. Okay, fixed costs are incurred on a time basis, not relate to activity. Time basis and do not relate to activity. So fixed costs here, we do not include it as part of the cost of goods sold. So that means it's not related to activity. Therefore, it's logical to write them off in a period cost in P&L. Okay, avoid fixed costs being capitalized in the unsaleable stock. So that means under stock valuation, when you do not sell the stock, so the fixed cost is not included in that stock valuation. So it is simple and easy to operate since it does not require the use of arbitrary basis of apportionments of fixed production overhead. So that means you do not calculate OAR for fixed production overhead. Okay, so because under OAR we have 6 basis. So we have to choose the most appropriate basis. Under marginal costing, we do not have to calculate that. Okay, but disadvantages here, the separations of costs into fixed and variable costs are very difficult. When you have semi-variable costs, sometimes it's very difficult to separate into fixed and variable. And then this method is not acceptable for external reporting, not acceptable under GAAP for external reporting and also income tax purposes. So misleading interpretation where only variable costs are relevant to planning, control and decision making. So when we focus on more on marginal costs, so sometimes it's misleading about the interpretations of variable costs only relevant. Okay, so inventory's variation will be understated because fixed production costs are not included. So this is advantages and disadvantages of marginal costing. Okay, then we move to absorption costing. So advantages and disadvantages of absorption costing. Under advantages, it does not understate the importance of fixed cost because fixed production overhead included in product cost. That means it's under cost of goods sold. So that means this method not understated the fixed cost. So it avoids separations of cost into fixed and variable elements. So when we have production overhead, we do not have to separate between fixed and variable cost. Okay, we take full cost of production. Okay, and then fixed production overheads are essential and important in production. So that's why it's included under stock valuation. Consistency with external reporting and is acceptable under inland revenue and also GAAP. So this is the advantage. But disadvantage of absorption costing is not useful in planning. For internal purposes, for management, it's not useful because it cannot plan because it combine together fixed and variable. Okay, it's not useful for planning, for control, and also for decision making because we do not differentiate the fixed and variable costs. And then apportionments of fixed production overheads by arbitrary method, which ultimately makes product cost inaccurate and unreliable. When we calculate OAR, that we have many bases. Okay, if we have different bases, the cost absorbed will be different. So it can affect the inaccurate and unreliable of overhead absorbed, fixed overhead absorbed. And then not helpful for preparations of flexible budget. Flexible budget is not helpful. Okay, it's not helpful because fixed costs and variable costs are not separated. Okay, so this is basically that what we learn in marginal costing and absorption costing.